We have a new president coming.
I will end inflation.
Let's get to business.
That means we also have a new economic plan coming, and in this video, I want to show you how you can take advantage of investment opportunities depending on who wins the White House. Now look, I'm not here to talk politics, I'm here to talk finances. And while history doesn't exactly repeat itself, it does rhyme. I want you to understand how to find the opportunities by studying what's happened in history. And historically, what we've generally seen happen is when a Republican is elected in office, you generally start to see more deregulation in the oil and gas industry. You generally see more deregulation in the financial services industry. And you generally see an increase in spending in defense companies, military companies. Generally, historically, when you see a Democrat elected, you start to see more regulation in the oil and gas industry, while you see more investment into renewable energies. You also generally see more of an investment into infrastructure companies, and you also generally see more dollars flow into certain healthcare companies because you see an expansion of things like Medicare. So what I want to do in this video is go over which industries might benefit if we see former President Donald Trump win versus if we see Vice President Kamala Harris win. And with that, I gotta give you a little disclaimer because investing has risks. You are never guaranteed to make money when you invest. In fact, you will lose money at some point, so make sure you always do your own due diligence and never blindly trust a random guy on YouTube. And with that, let me start by talking about the Trump side, and then we'll end it by talking about the Harris side. Starting with the deregulation of oil and gas companies. Back when Trump was president, what we saw was he was very big on deregulating these oil and gas companies. This deregulation allows for certain oil and gas companies to drill more, produce more product, and grow their companies, which is why, if you take a look at this chart, we saw some companies like BP, this shows BP's market capitalization, grow from 2016 to early 2020, right before the pandemic hit, which was when Trump was in office. Now, of course, not every oil and gas company benefited during this deregulation phase, but this is where your financial education comes in as to where you invest your money. Now let's take a look at what happened with financial services, because back when Trump was president again, he passed the first bill in over a decade to deregulate the financial services industry. When you deregulate an industry, you make doing business easier. Now, of course, this has risks because you can create bubbles, but it allows certain businesses to grow their profits faster. And so when you deregulate the financial services industry, this allows certain companies like banks and lenders and other brokers that are selling financial instruments to grow their businesses faster. And that's what we saw happen. Between 2016 and early 2020, we saw the financial services index rise by more than 70%. And then, of course, we have defense investment, which is our military, and the president helps to decide how much money we allocate towards our military. And back when Trump was in office, we saw one of the largest national defense budgets passed in the history of America. Now, here's what I want you to understand. When you hear more dollars are going into defense, that means the government is spending more money on military-related stuff, and these are often created by private companies. There are private companies that are creating the bullets. There are private companies that are creating the guns. There are private companies that are creating the artillery, the machinery, and all the things that are used in wars and with the army. And so when you see more defense spending, that can also mean more dollars are going into the companies that are producing all the military-related stuff. And again, like you can see here, between 2016 and 2020, we saw the aerospace and defense index and the stock market rise by more than 50%. So if former President Trump is elected again, there's a good chance that you can see more investment and deregulation in these industries. And with that, let's shift gears and talk about what would happen now if Vice President Kamala Harris is elected. Where would that change investment and regulations? Now, I do want to let you know that if you're interested in this type of deep dive analysis into certain sectors and different ways to invest your money in the stock market, my team at Briefs Media publishes a deep dive report called Market Briefs Pro, which is a weekly shift in what's happening in the markets. Actually, all the data that I got in today's video came from one of our previous Market Briefs Pro newsletters. So if you are a stock market investor and you have over $50,000 in investable assets, or you have more than $500 a month to invest, you can see if you qualify for a free content demo on what Market Briefs Pro does. So if you want to learn more about that and you want to stay up to date on what's happening in markets with research like this, I'll put the link to how you can sign up for that content demo down in the description below. If we start by talking about energy, generally what we've seen historically when a Democrat is elected is that generally Democrats are pro renewable energy and less pro oil and gas. However, we've seen a little bit of a flip-flop here with Vice President Kamala Harris, and what I mean by that is we've heard her talk about wanting to invest in renewable energies, but also being pro-oil and gas. So there's a little bit of a confusion as to exactly what she would do on the energy side. So let's move on to infrastructure. Harris has been very vocal about wanting to rebuild the infrastructure here in the United States. But again, you got to remember, the companies that are doing the actual rebuilding of roads and bridges and the infrastructure and all the machinery that they use is produced by private companies. So if there's more investment in infrastructure, the companies that do that construction and that build those machinery will probably be the ones that are benefiting. Now again, I'm not here trying to tell you what to invest in. I just want you to understand what this means. Because if we start to see more investment into infrastructure, that could potentially benefit companies like Caterpillar. It could benefit companies like Eaton. Or of course, you can also look at investing in ETFs that invest in a broad range of companies in the space. For example, you have the Global US Infrastructure ETF. And then of course, we have healthcare spending. And by healthcare spending, I mean healthcare spending by the government. Now, on one hand, you might have heard people talk about how Trump wants to reduce Medicare spending. Well, on the other hand, we have reports that Harris says that she wants to increase Medicare spending. Now, who does Medicare spending benefit? Well, of course, it benefits the beneficiaries, but it also benefits the companies that are getting those Medicare dollars. For example, United Health has more than 10 million members that use Medicare. So if you start to see more investment into Medicare and you expand Medicare benefits and you expand how many dollars are going into Medicare, well, then the companies that are getting those Medicare dollars would also probably benefit. Now that you understand this, let me show you the different ways that you can actually invest your money and build wealth no matter what happens. When you invest your money, you are buying an asset that you believe is going to be more valuable in the future, and our economy runs on spending. We live in a spending-based economy, and our GDP is a measure of our economy. Now the interesting thing about this, and I think a lot of people don't understand, is that 70% of our GDP is based off of the spending that happens in our economy, not by the government, and then 30% of our GDP is by government spending. And so now when you have a different president that's in office, that can impact this government spending, but it can also impact this spending through regulations and deregulations. And now when you were thinking about investing your money, the key here is I'm not an advocate for trading. I'm not a trader. I think trading is gambling. If you're going to be an investor, there are two ways that you can invest your money generally. You have what I like to call active investing. Some people like to call this fundamental investing. This is where you're investing in individual companies. The alternative is you are investing in funds. This is what I like to call passive investing. Some people like to call this dollar cost averaging. When you are a passive investor, this is a set it and forget it strategy. You find some funds that you want to invest in, and now you pick a cadence every week, every 2 weeks, every month. And you set it and forget it. Now, it doesn't matter what's happening with the presidency. It doesn't matter what's happening in the White House. In fact, when it comes to you building your wealth, if you got credit card debt and you have other things going on, it does not matter what happens in the White House. You got to be worried more about your house. But regardless, when you're a passive investor, you just have a set it and forget it system, and you just keep investing your money no matter what happens, whether it's raining, whether it's snowy, whether it's a Republican, whether it's a Democrat, you just keep investing your money. The only change you make is when you see a market crash, use that as an opportunity to potentially buy more. When you are an active investor, you're a fundamental investor, you're looking for opportunities, this is where you want to be investing for the long term in what you believe are good assets. Now again, there will be periods where certain presidents can make certain types of businesses easier to make profits, more difficult to make profits. But at the end of the day, a good company is going to find a way to make money and grow no matter what's happening in the White House. What does that mean? Yes, what happens in the White House can make certain impacts on certain parts of the economy, on certain parts of the market. But I want you to invest in good assets that can win no matter what happens in the White House. And at the end of the day, what happens in your house is more important than what happens in the White House. I think that's what Dave Ramsey says, which is so true. So now, what does that mean? What happens in the White House can make impacts on regulations. It can make impacts on where governments are spending their money. But at the end of the day, a good investment will be a good investment because you're investing in a strong company, into strong leaders, which are making a real impact on our economy. Goldman Sachs says that the stock market boom is just getting started. Take a look. In 2022, Goldman Sachs said that we had a 35% chance to enter a recession, but fast forward to today, Goldman Sachs says that never mind, there's only a 15% chance that we're going to enter a recession. But they're not just predicting economic growth, they're also predicting